Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Thursday, October 10th, 2019. This market wrap will be largely a recap of the analysis posted throughout the day on the site for members, but we'll start out here for those that just catching up now, coming in from work and listening to this. We'll start out with the first charts posted this morning. Really, it goes back to what happened last night, so if you caught up on the last update, yesterday's closing market analysis, we had some things happen in the futures overnight. So what we're looking at here is the ES. We had a quick swoon down, a news-driven spike down in the futures, followed by an immediate reversal. That was a better than a one. I think it was about a 1.8% drop in ES and NQ last night, followed by a nearly equal snapback. Now, what that did is it changed the technical posture since last night's close. Remember, we were up right about here where the pointer is, and that swoon down put in this divergent low. You can see here positive divergence on both ES and NQ, and brought us up here this morning. These charts were posted at about 7:30 this morning, a couple hours before the market opened, and so it was pointed out to keep a close eye on these levels here. I'll get to these in a second. The downtrend line, we had a minor downtrend line here, and that was highlighted all these colors in blue that stood out. This downtrend line, where a break of that would likely propel us up here, and then you had the uppermost resistance levels right there. You had the key downtrend line off the highs in ES and the 2946 level, big level. That's the top of the August trading range. It's there to the left of the chart here. So again, that was this morning, and on NQ. Well, actually, here's what happened there. We had a pop. That level was taken out, and it was taken out impulsively, and we ran up. I'll follow up. We ended up running into that 2946 level, which, as I did in subsequent updates, and I said here, really a break above there starts to change the near-term posture of the markets. It'll take out the downtrend line. It'll take out that big 2946 level, which again is the top of the August trading range, is very significant level in ES. I'll get to that in a second. This was the chart updated this morning after that breakout, about half an hour, 40 minutes after the market opened. And so these are, as I said there, watch these levels because that's a very significant technical level. And I'll get to that. Well, we'll do it now. Let's look at the ES and we'll get to NQ. All right, so that was then, this is now. So we did go up from there, almost a perfect kiss of that 2946 resistance level, which came in a hair above the downtrend line there. So as I said in the updates throughout the day, to me, a very significant level. Of course, we pulled back from there. That was, the pullback was to be expected. I'll get to that in a second on the midday updates. But where we go from here is important, because if we take that out, pretty much anything over today's highs, I'll get to SPY and QQQ in a second, but anything above there will take us back above the August trading ranges, number one, that 2946, which defines the top of that on ES. It'll take us above this downtrend line as well. Remember that downtrend line on ES as well as SPY. You have a lot of reactions here to validate that trend line, and the only time we went above it was this bull trap, the false breakout there. And false breakouts are usually followed by pretty swift drops down, as it was there. So we'll watch that tomorrow for anything more than a whipsaw signal again. And the levels to watch, really, it's today's highs, because this is the live chart right here, that previous reaction high, and then from there, like I said, the more we go up, there's certainly some overhead resistance, but that will call in that near-term downtrend into question, and it'll be a pretty bullish near-term technical development that could very well open the door for a run back at to test and even pop above the previous all-time highs in ES and NQ. So that's ES. Let's take a look at NQ. Let's go back here. Okay, so that's how the ES played out this morning, and the other charts posted again pre-market. Oops, we're shrinking here, and let's refresh that page. Okay, so again, this is NQ charts as of this morning, a couple hours before they open, highlighting the key levels there, the downtrend line, in intersecting 7722-ish resistance. Again, that's also the top of the trading range for the NQ. and then I had this level here in blue is a significant level. So pretty much these were your upside key levels to watch. You get a breakout there, significant resistance here about 77.89, and any break of last night's lows. And just like ES, we put in that bullish divergence right here on that thrust down last night. So again, that's what changed the near-term outlook since last night's close, which we were right here. And we also, by the way, the news-driven event was also a technically driven event. You can see an uptrend line there that was taken out. Minor uptrend line right here was taken out, and we had that 1.8% or so swoosh down, followed by that reversal in the futures. But again, that put in that 60-minute divergent low. Last time we had a bullish divergence on the 60-minute chart was right here, which gave us that rally there. And you can see some other divergent lows in place. So that was, again, earlier today. Shortly after the open, we did break out, and we didn't just limp above there once we broke out because it was a key level. The buyers came in hard. You know, probably cleared out some shorts. We had a quick thrust up. We hit that first level, 77.54, and again, that was at the close. Let's see how we finished the day here. And then we went right up to that the uppermost blue line I had. In other words, the most significant levels were highlighted in blue in those charts. 77.89, hit it almost to the button right there, and then pulled back and made a perfect back test of the trend line here. We'll just tighten it up a little here so you can see. So there it is. Technically driven event, right into resistance, pulled back, back tested. So right now we have a breakout above that downtrend line, and we're you know, still above or still below this resistance, so we'll have to see where this picks up tomorrow. Okay, and we'll get to QQQ now and SPY. So on QQQ, at the time that we hit earlier today, we were coming up on these downtrend line. We have the downtrend line right here, and the 189.40 resistance just overhead. And so they were in close proximity, and it had us coming back to back test this uptrend line. So here's a minor uptrend line. It's still in play. Again, this was screenshotted earlier at 10 o'clock, half hour after the market opened, and we had the same thing in SPY. We were at the top of this gap right here. In fact, the top of two gaps you can see in SPY. These two gaps top there with the key 294. This is still a very big level. Remember, that is the top of the August trading range, and so, you know, had us coming back to test this trend line right here for a quick pullback trade. And that was earlier today, and let's take a look at where we went from there. And so this is QQQ, and you can see we went on up, hit that 189.40, that upper blue line, pulled back, kissed the uptrend line, and then bounced from there. So it was good for a quick pullback trade, but we're still above that trend line. So where we closed the day, and this is the closing chart right here on QQQ, the levels to watch tomorrow are this uptrend line and pretty much today's highs, which again was uppermost, you know, that key level there, the blue line, 189.40. Again, top of the trading range, and NQ, I'm sorry, QQQ here, the August trading range, and then the back test of it. So a big level to watch, and it's pretty, to me, pretty clear. We're compressed in a very tight range. The risk of oversimplifying it, if the bulls can break it out of here, they win. At least near term, they still have 190.50 to contend with. That's that previous two reaction highs right here. Pretty well defined support you can see along there. But if they break it up there, look for that 190 level, 190.50 level to come into play, and if that goes, then there's really not a lot. There's certainly a lot of trading that went on over there, but I don't see any. I think that would be near-term bullish, and barring any type of crazy whipsaw signal, that could quite likely open the door to run back up at the previous highs, and maybe that marginal new high scenario. Like I like to say, resistance is resistance until unless taken out. So it was not taken out today. So we're going to watch these levels going forward. And if it does get taken out, still keep an eye on this trend line. This may come into play as we work our way up. And one scenario at the open tomorrow, I can see just looking at this chart. Should we pop up? Let's just say, for example, we popped up anywhere near above today's highs, somewhere up to that 190.53 level. It would look something like this. And put in a has the potential, depending on how high these indicators go tomorrow, to put in a divergent high here on the 60-minute chart. We haven't had that in a while. Last time we had negative divergence on the 60-minute time frame was right here. We had a divergent high. You can see what happened from there. That drop, divergent high here, that drop, divergent high, and divergent high here. So these are the 1, 2, 3, 4 divergent highs in the past couple months here, and we don't have one yet, but again, there's the potential. It depends how things happen. What that would entail pretty much is a gap and crap, where you pop up, gap up tomorrow, take out this previous high, either equal or take it out, to give us this wedge type pattern here in a divergent high, followed by, that would be of course step one, you have to reverse. Keep going much beyond there, you're going to burn through the divergences. But if you do reverse, then look for a break of this trend line, AK/wedge, and that could trigger a nice sell signal there and start the next leg down actually. And then we'd be looking for a run at and possibly below this 180-146 level. Let's see how that might look in SPY. SPY, again, going back to the 10 a.m. update there, we were right here at the top of the gap at that point in time, right here with 294 just above, and as expected and drawn out that snare, we came back, made a perfect kiss of the uptrend line, and pretty much stalled out there. We had a little bounce off there. So this will be to be continued tomorrow for sure. We'll have to see if the markets can pop 294. And if they do, let's see how that would look. I'll tell you, these indicators are pretty stretched. They might burn through divergence. It's hard to say if we'd have a comparable scenario, but I'll draw it out for you here. If we came up and made an equal or slightly higher high on a gap up tomorrow, we have resistance at about 296 right here on SPY. And so a pop up, as long as we don't go much above that level, could give us some divergence right here, 60-minute divergence. And if that's the case, remember, divergence is not a buy or sell signal, it's merely an indication of a trend reversal. So what you'd need to see is then a reversal and a break of this trend line, and then we'll see where things go from there, see what that looks like if it happens. Otherwise, if we go up much higher than that, you're going to take out any potential divergence here, and again, you're going to start to take out these previous reaction highs, and that will call this the current downtrend into jeopardy. As of now, we have a series, as I'm marking them here, series of lower highs and lower lows, which is a downtrend, but we're sort of pushing the upper limits of that trend now. We haven't taken it out yet, and if we do, again, you can see all the resistance levels overhead. Doesn't mean we're going to blast off, but like I said, it does start to chip away at the this downtrend we're in the near-term bearish case. And just loop back to the 60-minute charts of the futures. If I didn't cover ES, I think I did. If not, there's that downtrend line from this morning. Remember, this was a level that I was watching, these blue lines. We broke it out. Impulsive move right up to the 2946 resistance and intersecting downtrend line, and rejection there so far. We didn't go down very far. We're consolidating under there. So this is anybody's game tomorrow, bulls or bears. And you could probably, here I'll do it here, draw a comparable uptrend line on the futures right there. So we can watch this possibly tonight and into tomorrow, whether we break it before then or after, or you can buy back pullbacks to support to that level as long as it stays intact. So that's what we're looking at on ES and NQ. I believe I already updated that. Yeah, I did. We had the breakout, the tag of that 77.89ish level, pullback, back test of the trend line. So here we are. And we can also give a comparable uptrend line right here on the NQ 60-minute futures right there. That's trend line to watch. It could trigger a sell signal if taken out. Okay, and just to loop out to the longer term charts and look at the bigger picture, remember we had this breakdown in ES. I'm not crazy about this uptrend line. We've had quite a few trend lines off the lows on December 24th on SPY. This one here was broken, back tested, and we're below it. So if you want to view it this way, there's I'll color it here. You did have a breakdown, back test, and rollover. So I put the SPY on a sell signal there, and it has been moving lower since that back test, which was also a divergent high. And then I had this alternative trend line here, which we broke down, back tested, and we're still below, as well as that key 294 level. Remember, guys, 294 is not just the here, let me turn off all these lines for a second. It's not just the top of the August trading range right here, which was a key level watched by a lot of people. It is also numerous highs right here in the last year or so on the S&P 500 on SPY. We had one failed breakout attempt there, a second failed breakout attempt. We're coming back under that level now. So it's a pretty technically significant level. And again, that's why, you know, the next 2-3% from where we are now could determine the next 5+% in the market. If the bulls can power on through here, regain 294 with conviction, those levels I showed you on the 60-minute charts, the subtrend line, that could open the door for that scenario of another marginal new high. It's not going to change anything, at least anytime soon, on the posture of the daily or weekly charts, because it would just look like this. It would just be an extension of these existing divergences. There's no way, if we popped up there within the next week or two, there's no way these indicators are going to go through and burn through these divergences. So these negative divergences are in place, and so any new high, like I said, will most likely just be a marginal new high, followed by a reversal there due to these divergences. QQQ and XLK, we'll look at those and wrap it up. Let's go to QQQ. Let's go to this clean board here. Plain and simple. Here's the trend line off the lows on December 24th. We broke down recently. Pretty impulsive breakdown last week. Punch back up. If you're looking close, we back tested 1-2 different times right there. We're still below that trend line there. However, we're pushing, just like on SPY, we're pushing the upper limits of that August trading range right here in QQQ. You can see that there. And so if we go up much above that, we're going to regain this trend line and that 191 resistance level there. But as of now, we're below trend. So keep it very simple. That's the near-term trend is bearish. And although this market looks like it wants to push up and punch out those highs, we're still in a near-term downtrend. And more importantly, we're below trend on these daily charts and back testing right now. So that leans me slightly. Convictions aren't high, but I'm still leaning towards that reversal here and another thrust down. And if it's impulsive and we're coming off there, then that could open the door for a much bigger drop all the way down here to about 169.50, possibly even more. So that's QQQ. We'll keep an eye on that. And then finally, XLK. As I say, it's really going to watch just one sector. This is a sector to watch. Makes up the bulk of the S&P 500 and the NASDAQ 100. Trend line off the December 24th lows was broken and back tested, just like QQQ. These two are almost identical because QQQ has such a heavy weighting. About half the stocks in the NASDAQ 100 are tech stocks, so they're going to be in here. So you have almost identical charts. There's your breakdown right there and back test. Breakdown right here, I should say, and back test. Let me draw it out for you there, just to be clear. Pulse a breakdown below both that primary trend line off the 24th, and I have a secondary, you see, alternative trend line here, and both were broken, and this secondary trend line was back tested today. This first one was back tested already. There's also this downtrend line here to watch, and that's why I think we're in a pretty significant technical posture in the market. I'm just adding these divergence lines back to this chart here. So you can see, same story. If XLK happens to regain these trend lines here, then we're going to go up, most likely go up, put in a marginal new high, but any marginal new high anytime soon, as I said, with QQQ and SPY, will still be simply an extension of these existing divergences. And still looking for, like I said, minimal upside in the markets compared to the downside potential when these divergences play out. When and if, I should say. All right, so there's that downtrend line to watch, and you can view that a little bit better here on a 60-minute chart. This is a 60-minute XLK, and you have an uptrend line here, which was broken and back tested. Really comes in the same place that trend line on the daily chart does. After the back test, we've been moving lower since, and so here was your divergent high right here. Last divergent high in XLK was right there. We dropped from there. This was our most recent divergent high, and we remain, just like the equity indexes, SPY and QQQ, we remain in a near-term downtrend as of now, making a series of lower highs and lower lows, and we have this downtrend to watch tomorrow. If they take that out, then you watch for these previous reactions, and it would again be near-term bullish. And just like SPY, QQQ, ES, and NQ, here's that short-term uptrend line you can watch as well. So I guess that's it, guys. In a nutshell, wrap it up here. We're kind of pinching in this triangle type pattern in both the indexes and tech. So, convincing upside break, anything more than just a little whipsaw there, should be near-term bullish, whereas a break to the downside should be near-term bearish. We'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.